The market
Dom
open?
has our ETF edge. I'll let he can react to this however he wants.
I don't know, guys. Scott, I think Nike stock is maybe down because of the suede toe cap on there. But anyway, all right, so some ETF watchers are expecting returns to moderate in the second half of the year, while others see further opportunity in catch-up trades in overlooked areas of the market. Joining me now is one of the latter, which is Mike Akins, who's the founding partner over at ETF Action. Let's talk about a couple key points here. First of all, Mike, let's talk about the growth trades out there that might have more upside because they are being underappreciated compared to the AI tech trade.
Yeah, I think, if you look at the first half of the year, it was dominated by AI, semiconductors primarily leading the market. And as a result, there's been this story, this SaaS apocalypse, if you will, SaaS apocalypse. And I think, if you really look at the numbers, you look at the estimates, you've seen software names, cloud computing names come down from their nosebleed valuations to be in line or in many cases below that of the broader market with still very, strong growth scenarios. So I really like the software and cloud names heading into the second half of the year as the earnings come out and these companies prove that, yes, we still do need software to do our day-to-day jobs. And then I also think if you expand out a little bit further into kind of the mid-cap, small cap names. One of those names I threw up there, D-Tech, it's a thematic strategy across a number of different themes, disruptive technology themes, but it kind of plays a little bit further down market into the mid small cap range. And those names have been kind of left behind in this mega cap semiconductor led market. And I think those could do quite well when you look through to their earnings growth estimates by the analysts. It's just a pretty rosy setup.
And Mike, really quickly, any other catch-up trades that you might like for the back half of the year?
Yeah, I think, the first half of the year, while the conversation was dominated by AI and semiconductors, we actually had a very broadening of the market, right? Who thought that Meg 7 was going to be flat year to date at the halfway market, and we'd still be seeing, the market as a whole up 10%, tech up 20%. So I think there's an opportunity here to continue to see that broadening. I like emerging markets, ex-China primarily. One concern there would be just how large of an allocation you've gotten into the memory chips just because they're crazy run. So you may want to look for some different weighting methodologies or active management in that. But the other side then is small and mid caps. I think, to the extent that you have some sort of screen for quality, for profitability, I like that to continue to play out. Small cap growth has done incredibly well year to date, but so has value. Blend all of the kind of down market names are really starting to catch up. And I think, you could see that continuing throughout the year, not just from growing earnings, growing revenue, but also from an expansion of multiples that are extremely depressed over the last several years.
All right, interesting catch-up trades for sure there. Mike Akins at ETF Action, thank you very much for that. And remember, you can catch all of our other content over at etfedge.cnbc.com. We'll see you again here next Monday. Scott, I'll send things back over to you and those suede toe cap sneakers.
Yeah, thanks very much. That's Dom Chu. All right, coming up, we do have options action today. Oliver Rennick is flagging some big activity in a name that reports earnings this week. Both Joe and Jim are in it, which means we trade it next. Options action time, which means we go to Oliver Rennick. He is live at the Cboe Global Markets in Chicago with more. Hi there.
Hey, Scott, options traders are in a tricky spot ahead of Delta earnings Friday. On the one hand, it seems like the Iran war is getting refreshed. But on the other hand, airline stocks are up since the war began. Delta shares are up 25% year to date, almost triple the return of the S&P 500 as carriers cite warm weather and strong consumer demand. But don't forget about higher ticket prices and the supply we lost when Spirit shut down. Options traders expect a notable swing, 6% in Delta after earnings compared to a median 4% realized move over the past year. Put buying more than tripled call buying in DAL options today, and call selling was the most popular directional trade. But the biggest dollar amount trader of the day actually took the other side, paying almost $800,000 to scoop up 800 of the 90 strike calls expiring in January next year, contracts that need an 11% rally to pay off, Scott.
Oliver, thank you. That's Oliver Rennick. You want to do this here? Are we? Okay. Oh, that's right. I'm sorry. We're trading Delta.
Are you with us?
I don't know. Apparently not. Jim, save me, please.
Yeah, I don't know what was going on there.
It's okay.
Yeah, okay. Stock's off 10% in a week. So whereas last week I was expressing to everyone that it was ahead of itself, now it's no longer ahead of itself. Trading at 10 times next year's earnings, which I think is reasonable. It's a little bit on the high side, but remember the debt on the balance sheet has been going down as free cash flow has been in the $3 to $4 billion a year phase for quite some time now. So look, I think this is a level at which you can have good gains from Delta. I am willing to add it with new money that comes into accounts.
You didn't give any TSA statistics, but demand is remarkably strong, in particular for Delta and United. We own both of them. You will hear a lot about fuel costs, fuel prices, the direction of jet fuel. I think the spike in jet fuel probably led to the Spirit situation, and that benefited the market share of both Delta and United tremendously.
Okay, thank you. Coming up next, we have more stocks on the move. Big business of the World Cup, big ratings, even bigger broadcast rights are coming. We'll tell you, according to our Alex Sherman, who's reportedly interested. Next. the president wrapping up his news conference at NATO. Let's get to Megan Casella in Washington, who has the highlights for us. Hi there.
Scott, as you can imagine, Iran was the dominant topic at this news conference. The president elaborating on his comments from earlier in the day that in his mind, the ceasefire is over and that the U.S. would be attacking Iran again tonight. Reporters were trying to get clarity from the president on what exactly will be happening next. But the president sidestepped that question, saying only that what happens next is that Iran will never have a nuclear weapon. He said that's more important than any rise in oil prices that we're seeing today. He was downplaying any impact on the markets from everything that we've heard so far today. This time, he sort of softened the stance on the next attacks. He says the U.S. might hit Iran tonight, but that he doesn't think that the war is going to start again, at least not full-scale war. But he also said that he's not sure he wants to make a deal with Iran at all. He says we can play games, but I'm not sure I want to make a deal. Let's just finish the job. So a number of comments now from the president, but it's really not clear what exactly is going to happen next. Clearly, we're on shaky grounds with the Iranians. The ceasefire is off, and likely more attacks from here, Scott.
Okay, Megan, thanks for that update. That's Megan Casella. All right, some stocks on the move. I want to talk about Netflix and Disney and Google, for that matter, said to be interested in the U.S. World Cup rights. The package, according to our Alex Sherman, could reach $2 billion. Jimmy, go to you first.
Frankly, that doesn't seem like an expensive price. Here in America, the importance of soccer, football is continuing to grow. Outside of America, it's already the most popular sport in the world. $2 billion. If either of those companies gets it for that price, it is a bargain.
You'd be happy if Disney...
I'd be very happy if Disney pulled away with it. Very happy. I have a feeling, Scott, that price is so low, I have a feeling there's going to be a bidding war.
Okay. FIFA apparently alerting the media companies that the English and Spanish language rights are likely to be sold together, which would be different, which would only obviously escalate the price tag that it would cost whoever is the winner. What do you think?
I think the rights to live sporting events, exactly where the focus and intention of all of these streaming companies will be. We've seen it the last several years with Amazon, with Apple, with others. I like the rivalry that is intensifying and continues to intensify with Disney and Netflix. And I said last week, I don't think you were on, Scott, but Netflix, go after NBC Universal. Go get them. Go after NBC Universal. And you want to talk about a rivalry 10 miles apart. We'll bring you back to baseball here in New York with the Yankees and the Dodgers in the 50s. How about Disney and Universal Studios? 10 miles apart, owned by Disney and Netflix. Wow.
So I think you make a great point that that's one of the things that Disney has that Netflix doesn't, is the theme park. So I'm totally with you. That's what Netflix should go after.
Okay. How about this? SLB, calls of the day, initiated outperformed $62 at Wolf. That's you.
Yeah, I mean, look, collectively, you've had a nice pullback in energy. You have opportunity in Diamondback and Devon, in Schlumberger and Halliburton. A lot of it's dependent, though, upon oil not falling and reversing quickly below $70.
Okay, Bernstein says now's a good time for integrated oil exposure. Bryn, I'll come to you. They like Exxon, their top choice, Devon and Diamondback's yours. They say has the most upside in their coverage.
I mean, I think in the E&P space, they've got the C-suite, they've got the execution, they've had a lot of capital discipline. And so I think really none of these companies increased drilling very much during this Iran skirmish, et cetera. And so I just think that capital discipline is there and the stock price should continue to be rewarded.
Okay. What do you think about this call?
Again, I think it's dependent upon oil itself. We've took small positions at the most recent rebalance in a lot of these names, but I think it's more prove it with sustained prices above $70.
I'm a big believer in ExxonMobil, but I don't think it's dependent on crude oil. I think this is a long-term hold. If you look at long-term track record for an ExxonMobil, it has been stellar, and it doesn't depend on where crude oil is.
One area of energy, real quick.
No.
Valero.
Oh, okay. All right. We'll do finals next. All right, I hope you'll join me 3 o'clock Eastern today on Closing Bell. BlackRock's Rick Reeder will be right here at Post 9, and then a big interview from the soccer world. Alexia Putellas leaving Barcelona, joining London City. It's a huge move in the world of football, where she joins us along with the London City owner and investor Michelle Kang. So I hope you'll join us then for that big interview. Bryn, final trade.
I like Jim's trade, but I'm going to go DRAM, but then I'm going to sell the September 70 calls for $7. I think it's a great risk-reward trade.
Farmer Jim.
Vertex Pharmaceuticals, exciting acquisition yesterday, diversifies their product line.
Okay, Liz Thomas.
Real estate, I think valuations have bottomed and rate hikes get priced out for the rest of the year. That's a tailwind.
Joe T.
NVIDIA is going to prove that Lag 7 moniker is wrong.
Okay. I will see you at 3 o'clock. The exchange is now.
Scott, thank you very much. The president says he may strike Iran again tonight, and the markets are taking it somewhat in stride. We're well off the earlier session lows. Dow's down about 619, though. One of our guests says that's a mistake, this relatively muted reaction. I'm Kelly Evans, and welcome to the exchange. An escalation on several fronts today. On Iran, with President Trump declaring the ceasefire over. And in Europe, with Russia and Ukraine continuing assaults on each other. And all of this happening against the backdrop of the NATO summit, where the president just wrapped up a press conference. So let's start there this hour. Our Steve Sedgwick is live at the NATO summit in Turkey. Steve, and recap for us a little bit of what we learned from the president. He's spoken quite a lot today. What's the temperature of the room as all of this has taken place, and what else has happened in the past couple of hours?
Kelly, I've had the pleasure of working with you for many, many years, and it was one of the most extraordinary evenings I've had in my career this evening. I came into that press conference with the president really, really concerned that he was going to slate NATO, slate the allies, talk about pulling those troops back again, and all other issues as well. But what we got was actually a president who said it was tremendous love inside the room with all 32 members. And he even said nice things about Spain, about Denmark as well. And it was quite extraordinary how positive the president was, considering how negative he had been about so many parts of NATO in the build-up. But he was really pleased about the spending levels. He was pleased, actually, that the level of support from the room was so full-hearted regards Iran as well. And I actually got a question into the president, and I said, look, sir, the world has taken you at your word that the MOU is over, that the ceasefire is over, oil prices, WTI and Brent up around about $7. What happens next? Is the MOU dead? And are we going to see a resumption of the full-scale conflict? The president didn't actually directly answer the question, but he did actually say that he thought oil prices were going to go down dramatically from here as well. So he didn't seem very concerned about the blip up we've seen today. He also talked about the nuclear capacity of Iran and saying they would never have a nuclear weapon, and that was his key priority. And that was what he was working for going forward. But I have to say, considering the curveballs and the chaos that preceded this meeting, that was during this meeting, I thought it was a stunningly positive Donald Trump, and positive for the North Atlantic Treaty Organization as well. I didn't expect to see that. And as I say, Kelly, I thought it was one of the most extraordinary days I've had in my career.
I'm so glad that you're there, because I saw those headlines on the wire and I thought to myself, well, there must be more to the story. But you look at the market reaction, which is still to some extent lower today, although not dramatically so. So just one more time, I mean, it's one thing for the president to kind of strike a more positive tone. It's another thing for that to indicate there's been a substantive development. I mean, does the takeaway from this then, contra to everything that we've heard over the past 24, 48 hours with his incendiary comments about Greenland again and his comments about Spain, is all of that out the window now?
That is an amazing question, and I don't know. But, you know, we've had all this comment, I mean, but I may pull all the US troops out of Europe, 80,000 troops. I may pull out more aggressively. And we've got this Pentagon review, which Pete Hegseth started in June and is set to go 6 months, where pretty much every NATO member is on trial for the support that the US were to give it. But I honestly, and I'll reiterate, he said every single person in that room was very positive. He said even the people that I have had problems with previously, and I think he was alluding to Spain especially, he said, no, it was really positive. And so no problems at all. No problems over Greenland, no problems on spending, no problems on Spain. Again, he says, and his words, there was a tremendous amount of love in the room. I wish the press could be in there. And he said, no, the press can't be in there because perhaps we wouldn't all be speaking so freely. But he said, I listened to every single one of the other 31 nations, and it was incredibly positive. Kelly, I can't tell you how different president that is from the president we've heard speaking to the press over the last couple of days. He said, do you remember, I don't even want to be here. I'm only here because of President Erdogan, who is a great guy, and he was very, very complimentary about President Erdogan. And I have to say, the big winner in this conference is probably the Secretary General, Mark Rutte of NATO as well. There have been some rumors that actually maybe he was going too far in his support for the US president and just trying too hard to appease the president. But I've spoken to 14 world leaders today, Kelly, 14 world leaders, and everyone said Mark Rutte is doing a great job. And the president, Mr. Trump, said, Mark Rutte, fantastic job as well. And for the leader of NATO to come away with that, and with the president saying that after this conference, I think that is a huge win for NATO out of this conference.
Steve, one more follow-up to that, more of the implementation front. So with the two big conflicts still raging, with the Strait of Hormuz, that's not resolved by any means. I think the president was still looking for Europe to back him up more on that front if we need to reinstate flotillas or something like that. That's one issue. Russia is another big one, trying again to kind of figure out if there's ever going to be a move that they make on NATO or on Europe. Is the continent ready to respond? Are we there to kind of help them with that? So on those two topics, I guess we didn't hear anything specific out of the press conference just now, but we have to imagine that there's, in fact, a little bit more unity than feared.
Yeah, I think so. I think you're right. And I think the turnaround in the language towards Kyiv, towards Ukraine, and towards especially President Zelensky is quite extraordinary. Look, none of